This is Terrence Andre Banks with Information Age Financial Solutions, coming to you with an article today from How to Profit from the Apocalypse. And this article was seen in Casey's Daily Dispatch from Casey Research. Don't really come across this website that often, but stumbled across it because I was just looking for different things for stocks and stuff like that. And I was just looking at my own websites, and I just came across one because I got an email research about some companies to look into. So today I'm going to highlight some of the things to take a look at, especially if you're into stocks and trying to profit from the retail apocalypse. That's what he's hinting at here. It was a stock, and I'm just going to read a little excerpt there, and I'm going to kind of scroll down to where he gives a couple of listings of some stocks to look into, especially if you're looking to profit, especially as well as the market continues to go up. And today we reached over 22,000 in the Dow, so you may want to take a look at these couple of stocks that he's mentioning here. It was the stock's worst one-day crash since 2000. The sell-off began after the one iconic American retailer shared bad news. It admitted that no one wants to buy the company. You see, Eric Comrie is in turmoil. Sales have been falling since 2014. It plans to close 60 stores over the next 7 months. It desperately needs a lifeline. So the company is trying to sell itself, but no one wants to buy it. The company's too toxic. After Monday's crash, Abercrombie is down 54% over the past year. It's trading at its lowest price since the dot-com crash, but it's likely headed lower. It could even go bankrupt. If it does, it'll become the latest victim of what I've been calling the retail apocalypse. Now that's been coming around. You see it a couple of times on that, especially in retail apocalypse. I even mentioned before about a number of retail stores closing. It's not new news if you're in that space, but it may be new news to you if you just read it, if you're getting abreast of this and come across this now. Regular readers know this is a genuine crisis. Yes, it hasn't even taken toll in itself. It's taken its full tolls as of yet, but it's going to hit, and it's going to hit hard. And the ramifications can be seen in a couple other videos that I mentioned before in terms of pensions and everything else that's locked. But let me kind of scroll down a little bit more. More than 3,000 retail stores have already closed this year. By the end of the year, more than 8,000 stores closed their doors. That will be the most ever in 1 year. It's worth repeating again. 8,000 stores could close their doors this year, and that'll be the most ever in 1 year. That is why I've been urging you to avoid traditional retail and mall stocks. He's giving financial advice here, things to look at. Americans aren't spending money like they did in the old days. Contrary to belief, they're not spending as much money. They're visiting malls less and doing more shopping online. Nothing new. There's clearly bad for traditional retailers and malls, but online shopping has triggered a huge boom in a small corner of the real estate market. Here's where it gets good, where he gets a recommendation. I'm talking about industrial real estate companies. These companies own and operate warehouse and distribution centers. That's why I took notice to it, because with the online space, warehouse and distribution centers are definitely a place to look into. It's not a sexy business, but it's essential, and it can hand you massive gains in the years ahead. After all, every dollar of online sales requires 3 times as much as space as a traditional retailer. Plus, online retailers need warehouses to store up and ship goods. Now more than ever. Just look at Amazon, the world's biggest online retailer. The demand for warehouse space surged 35% per year since 2007. That's breakneck speed. Walmart, Alibaba, Overstock, and many other retailers also invested billions in warehouses. According to research from Jones Lang LaSalle, online shopping is accounted for 40% of industrial real estate demand. The industrial real estate market is now booming. Rental rates for industrial space have skyrocketed. In the U.S., industrial rents have climbed 9% over the past year. They're up 25% over the past 3 years. And he gives a chart here showing that. Let's get down to where he recommends. Online shopping is going to double over the next 5 years. We can all believe that. You too can cash in an industrial real estate boom. And here are 5 industrial REITs to consider for your portfolio. Now, again, I'm not a financial advisor, so you take this with a grain of salt. I just always want to provide information age financial solutions, and definitely things to look into, especially because we have platforms where there's literally no cost for you trading a stock. So if you have financial intelligence, you've done your research, you know a little bit of technical analysis, you may want to look into these 5 companies he mentioned here. I'm doing my research and taking a look at them myself. Prologis, PLLD, Duke Realty, DRE, DCT Industrial Trust, DCT, PS Business Parks, PSB, and First Industrial Realty Trust, FR. These stocks are a great way to profit from the online shopping boom, and they trade on the New York Stock Exchange like most other stocks. So one to look into, especially information age, especially with using platforms like Robinhood. Until my next video, I'm out.